It's February 12th, 2008. This is vlog number 2 for AbsoluteGains.com. Today I got 3 safe picks that are going up. First up is IYH. IYH is an iShares fund that mirrors the healthcare sector in the US. Now, by going with IYH, you don't have to pick out any particular stocks within the healthcare sector that you think are going to do good. Instead, by going with the fund, you give yourself a broad-based exposure to the entire sector. That way, when one or two companies does really good that you didn't see that happening, you still reap the benefits from it. Now, the first reason I like this fund is the most obvious. People get sick. It doesn't matter whether the economy is good or whether the economy is bad. People go get medicine and treatments and the like. The second reason I like this is because historically the healthcare sector has done really well in periods of recession. Since there's a really good possibility that we could slip into a recession, this also makes it a really safe pick. But regardless of what the market decides to do, IYH will be up on the year. And one more little note about that, keep your eye on what happens in November. Depending on who wins the election, IYH could get an extra little boost. Alright, pick number 2, KXI. KXI is an iShares fund that mirrors the consumer staples sector. This is a great place to be in times of economic uncertainty. This is because the consumer staples sector represents firms that get sales no matter what the economy is like. Now, we've already been over the healthcare sector, which people have to buy also, regardless of how much money they have. But this is actual firms that sell products that people use every single day. As a result of this, a lot of the firms in this sector actually benefit from when there's a recession. This is because people buy more of what they need as opposed to just what they want. Take a look at some of the companies that make up KXI. You have Procter & Gamble, Walmart, CVS, Coca-Cola, Pepsi. These are companies that get sales no matter what the economy is like and how much consumers have to spend. One other thing that's really good about this is there's a lot of international exposure from a lot of the firms that make up this fund. That means the US economy doesn't matter as much. That also means that these companies can actually benefit from a falling US dollar. Take Coca-Cola for example. 25% of their business is in the US, but 75% of their business is overseas. That means they're insulated from a big shock to the US economy. Now, if there is a recession, this will be one of the best performing sectors all year. In the event there's no recession, the whole market still goes up and you have a modest gain without taking the risk of having a big loss. The time frame you're looking at on this trade is 6 to 12 months. Pick number 3, MCD, McDonald's. In all actuality, this is a consumer staple too. People eat at McDonald's, just plain and simple. Let me give you just a few of the reasons that this stock's going up. Number 1, it's consumer staple. Number 2, international sales. People love McDonald's overseas just as much as they do here, if not more. Europe has seen more growth than the US lately, and in China, they're opening close to 1 store per week. And with the Beijing Olympics coming, that's just going to mean even more revenue. Number 3, coffee. McDonald's recently announced they're going to start opening a barista in a lot of their stores. I hate coffee, but for some reason a whole bunch of other people love it. This is only going to drive even more people there. Oh, and here's a little secret. Starbucks announced they're going to discontinue offering their breakfast sandwiches by the end of this year. That just means even more business for McDonald's. Number 4, a tiered pricing menu. This is something that a lot of fast food places have employed. This is where you can go in and get things off the value menu, you can get things off the dollar menu, you can get things a la carte. It's something different for everybody in different price sections. Oh, and on top of that, you can still supersize and order your apple pies and your drinks that they make incredible margin off of that just adds to their bottom line. I actually started telling my friends and family to get into McDonald's on January 29th, which is the day after it fell 5% in one day. Now, the people that listened to me then got in around $51 a share and already sitting up about 10%. But that's just the start of these gains. It's trading after hours at 56.21 and it's only going to go up from there. This is something you're going to want to hold anywhere from 4 months to a year or maybe even more. McDonald's is a growth story.
All content contained on and associated with AbsoluteGains.com is only an opinion.